Hey, what is going on everyone? Welcome back to another YouTube video. My name is Jerome and I'm a full-time Forex trader here in Sydney, Australia, and I'm also a ASFX coach for Austin Silver. In this video, I'm going to do something a little bit different. I want to take you guys through some back testing. So we're going to spend about 15-20 minutes going through the charts. I want to show you how I approach the markets, how I shift all these probabilities into my favor that allows me to take advantage of these high probability trade setups. Before we go any further, I just want to give a quick shout out to all my new YouTube subscribers. Thank you guys so much. I appreciate you guys showing me some love and watching my content. If you have any suggestions or anything you want me to cover, please drop a comment in the comment box below and I'll be sure to check it out and try and give you guys the content you want to see. So as I was saying, we're going to go about 15-20 minutes in the charts and I'm going to show you how I look at the charts, how I do my technical analysis, and how I shift probabilities into my favor, which allows me to be more selective, more conservative on my trade, but also allows me to hit these trades with more size because they are higher probability trade setups. For anyone that's not within ASFX, the system I'm going to be covering is the ASFX A1 system. This is a breakout strategy and it is very, very effective. So I'm not going to give too much away on the strategy because I'll just be giving it away, but I'm going to take you guys through the very basics and how the system performs. It's a very, very cool system. And the way Austin has taught these systems and the way he has taught me has really shifted and changed my whole trading approach to the market. It allows me to read the market and get a very clear idea on what's happening and where price is going. But you gotta remember, these systems are fractal, meaning they can be used on higher time frames, but make sure you test them before you go. I've been testing it on the 15-minute chart and I know it is very profitable. So without me rambling on too much, let's get into it. All right, so let's get into the charts and I'll take you through exactly what I'm looking for, why I'm looking for it, and how these parameters affect the outcome of the trade. So let me take you through the indicators real quickly. So what you can see on my screen is, we'll start at the top here, and as you can see up the top, we have this blue line. That is the 800 EMA. So at ASFX, we use 5 EMAs. The 800, which is the higher time frame trend. And then we have the 200. The 200 is the bulls or the bears last stand. So when price approaches this level after a strong downtrend, if we're gonna pull back up to the 200 EMA, we can expect some resistance and a lot of fighting going on. Is the trend gonna reverse? Are we gonna break back above it and use it as support and have a trend reversal? So this is a great EMA to kind of look and determine what's gonna happen when we break back above or break back down below. Coming over to the 50 EMA. So that is this blue line over here. Now the 50 EMA acts as pullback support. Not so much as good as a 21 EMA, which we'll get to that in a minute, but the 50 EMA is a support and resistance level. It is a decision factor in the market. If price comes to the 50 EMA, it is most likely going to hold if we're in an uptrend. So price is trending up. Price comes down to the 50 EMA, we'll most likely see it reject with a pin or a candle formation off it, and we'll see price reverse. Very often, depending how strong the uptrend is, we will see price break below it, won't be able to hold below the 50 EMA, and then will break straight back up above, continuing that bullish trend. Coming over to the red line over here. So this red line is the 21 EMA. And now this is pullback support. So we can often see price pull back to the red EMA in an uptrend, pull back to it, and then kind of just continue up. When it gets to the 50 EMA, similar situation, but that is a deciding factor. When we get down to the 50 EMA, we have to watch what price action does and how the market reacts to that. Because if you're looking to go long, but price action is breaking below the 50 EMA, could be a chance that going long may be a bad idea. And then you have the yellow line over here, which is the 8 EMA, and that is a strong short-term trend. If price can hold outside this 8 EMA, excuse me, if price can hold outside the 8 EMA like it does here, you know we're in a very strong uptrend, and vice versa. If we're in a bearish trend and the price is holding below the 8 EMA, very strong short-term trend. So moving on, so let's get into some back testing. And then before I move on, the indicator at the bottom, this is the TDI. So the Traders Dynamic Index is an amazing indicator. Once again, we add all these parameters into our trades so we can make sure they all align, and it gives us more confluence and confirmation where we are trading and why we are taking trades off a significant level and if we're trading in the right direction. So let's kind of show you what more or less we're looking for in the market. So I always want to go full trend. Now, as you can see, price is moving up towards the 800 EMA. So you can see, and then we got the 800 EMA up here. So if you were to take a long position now, you'll be trading counter trend. But looking at this TDI, the yellow line, which is market sentiment, kind of tells you which way the market's going. So if it's above the 50 value in the buy zone, you should be more or less looking for longs. If it's below the 50 value in the sell zone, you should be looking for short positions. Now, this is what I was talking about when adding all these confluences in the market. When the EMAs are bullish and the TDI is bullish, which means the yellow market sentiment line is above the 50 value in the buy zone, you have a clear long bias. I won't go too much in the high time frames. I just want to stick onto the 15-minute for now. So once you have that clear bias, you know you're looking for long positions. So you're basically now looking for what we call the A1 setup, which is a very, very clean, very nice signal in the market integrating these EMAs. Now, once again, I'm not going to go into too much detail because I don't give too much away, but I'm giving you guys an idea of what I'm looking for and how I'm stacking these parameters in my favor to look for those high probability trade setups. So as you can see, we're counter trend, that would be a knock, but the TDI, the yellow market sentiment line on the bottom there, is in the buy zone. So counter trend, and I'll take you through one other parameter as well, but let's continue here, back testing. And then as you can see, this black box just appeared. So this is the first 8 hours of the day, right? That is the Asia session. So as we know, there isn't much volume in the Asia session. A lot of the market movement happens around the London session and the London-New York cross. That's when a lot of the bigger banks are open. That's when a lot of the bigger traders and hedge funds are taking their positions and trading. So it makes sense to trade in the London session when you have that movement. You're not gonna, get whipped around within the Asia session as it tends to do. So these signals work best when there's a lot of movement in the market and it's just a very clean signal. So moving on. So as I was just saying, black box is the Asia range. So that's another parameter. So once again, not going to go too much into detail on these. So moving on. So now you can see we are in a full downtrend with the EMAs. So I'll be looking for short positions. We got the 800 on top, to 200 below the 800. We have the 50 below the 200, the 21 below the 50, and the 8 below the 21, which signals a full downtrend, which means you'll be very short bias on the 15-minute chart. Moving over to the TDI. The TDI is now below the 50 value, which means it's in the sell zone, so you're short bias on the TDI. Stacking those two together, you now have short bias EMAs and short bias TDI, which means short bias. Now, of course, you can go into the higher time frames and do the exact same technical analysis, shifting those probabilities into your favor. So moving on, we now wait for our trade to present. And as you can see, we've had an ASFX A1 entry. I'm not going to tell you too much of how we get involved, but it's stacking these trades and these parameters in Confluence, using a few extra signals in the market that is presenting us. And once again, you can see how the EMAs and how price is reacting to it. And this has been the biggest game changer in my trading journey so far. You can see how price is testing that 21 EMA, which is that red line. All right, so sorry if this doesn't make it. I'm trying to get this done in a short period of time. I don't want this video to drag on too much. But you can see all these wicks to that 21, and price can't break back above. You can see price almost tries to break back above here, the 21, but it can't. And you can see this massive bearish rejection off it. That is how price reacts to these significant levels. And that's why using the EMAs as dynamic support and resistance can really help develop really good trade entries. And obviously using your stop loss in conjunction with these EMAs, putting them in a safe spot so you're not going to get stopped out. So let's see how this trade progress. We're already up about 1.5R, and then let's see what happens. And then it reversed straight away. Now, this would have been a trade. I would have been profitable on this trade. I'm not going to go through my trade management and how I manage my trades. If you want to know, contact me and I'm happy to tell you how when I lock my stop, when I take positions, because I take partial positions as well. So this trade would have been a small winner, but not a loss or not break even. So that is a good outcome. So the way I trade, this would have been 0.75% gain. All right, so moving on, and let's see what happens. So you can see how the TDI is now rising, so which means market could get that pullback up to that 200 EMA. Let me just bring it back a little bit. So once again, market's now at that 200 EMA. This isn't within my trading time frame, so I won't test it. I'm only testing anything from after the Asia session when I'm at my desk to about 1 a.m. my time. So still in the London session, open. And then this is pretty much what I do is I rinse and repeat. And then I stack the parameters in my favor, looking for those high probability trades. And as you can see, there was another entry here. And then this one obviously would have been at a loss. Now, without going into too much details, this wouldn't be a trade I take, but I am still marking them up and back testing them because I'm trying to get a massive sample size of how the parameters work. Knowing when you've only got two parameters in your favor, in this case, I've only got EMAs and I've got the L50 in the sell zone, but the L50 is swapping, which means it could be choppy or the market could reverse. So that's a knock. It's still within the Asia range, which is another knock. And I'm trading off a certain candle formation that can sometimes see a reversal. So this is a very good signal as to why putting all the parameters in your trades and being more selective, you don't have to take every trade setup. Just because your signal presents in the market, it doesn't mean you have to chuck money at it all the time. Wait for all the stars to align. Wait for those high probability trades to present. That's when you can get involved in them. So going on, this would have been a small loss because I would have been out about there. Oops. And then moving on. And that's another good thing with these trades. You know when they're not going in your favor, so you're able to cut them for a small loss. You're never going to get involved in a trade and just wait for it to hit your stop loss. You can tell how the market's reacting to the EMAs to certain levels. And if it starts going against you using some of our trade management parameters, we can cut the trade because we know that more likely than not, it's going to reverse and hit our stop loss. So without losing that full position, we can maybe lose a quarter of it or half. So let's see if I can show you an example of so there would have been no trade, no signal presented on that day. So we just move on to the next. And there was an entry signal in here. Now, there's a few other parameters, but I'm not going to go too much in them. I'm just going to focus on the indicators, the EMAs and the TDI and this Asia range. So the entry signal was up here and it was off a candle formation. This wouldn't be a trade I'd be involved in because once again, it's a few knocks to the parameters. I'm not shifting everything in my favor. There's a few things that signal, hey, price has kind of overexhausted itself. It may go up, but it's going to come down. And what we're looking for to develop is risk to reward profiles. You want to know that the trade you enter can at least hit a minimum of 2 to 1. So if you're risking 10 pips, you want to know that that trade can reach 20 pips with ease. You want to take the path of least resistance for your targets and the path with most resistance to your stop loss. So what I'll do is I'll then wait for price to either come back down to that 21 EMA or the 50 EMA, and then I'd wait for another signal to present. But going forward, you can see even though all the parameters weren't checked, all the higher probability parameters and shifting them in your favor, you can see that price has still managed to go up about 1.3 R. Now, once again, that's a 23 pip stop. If I took this trade, I would have known I would have to at least get 40 pips. Market has to be able to move 40 pips to get that 2 to 1. So I know that I wouldn't be in this trade because depending on ADR, which is average daily range, plus I'm trading counter trend, plus it's a swapping L50 and the entry candle was overextended, there are too many knocks. There are too many things in that trade that could lead to chop, reversal, or getting stopped out. So, and then once again, the risk to reward profile, if I was aiming for that, it's just 2 to 1 there. So this isn't something I would be involved in. There are too many knocks and it's just not a very high probability trade setup. Let me try to find one more example. Once again, this trade would have been a break even because I would have moved my stop. So far we're about 0.75% in profit. I also have a backtesting video that I go through how I build out and track all the analytical data. So my entry price, stop loss price, target prices, everything like that, the entry dates, and I show you how to build it out in Google Sheets, and I show you how to go through TradingView and how to use what TradingView offers to backtest, like exactly how I'm doing now. So I'll put a link into the video up there, and please go check that out if you really want to know more in depth of how I backtest. Basically, I'm just showing you how the ACE affects entries and what I'm looking for and how to shift all those probabilities into our favor. And once again, we have another A1 entry. So parameters, shifting them in our favor. This is trending now. The EMAs could be better. As you can see, that white 200 EMA is coming right across price data. That's not a good sign, but it can always work out, but more times than not, you want clean EMAs. So that's just shifting those probabilities into our favor, looking for that clean price action, looking for that clean liquid 50 to L50 market sentiment line in one zone pretty much the whole trading day, and looking for those clean EMAs. And then once again, you can see this would have been a break-even trade for me, but because everything doesn't line up, you can see. Now I'm going to give you one more example before this video gets way too long. I'm going to give you an example of all the parameters lined up. Now, I'm just going to go through the charts, and I'm gonna wait for all the stars to align, and I wanna show you the outcome. There's another signal in here. I will mark this one up. But once again, this isn't a high probability trade setup. And see how you instantly get stopped out. What just happened in that, without going into too much detail, is we broke the Asia range, and that is on the candle break. You can always see kind of price come back into that range. So that is something you want to be wary about. So obviously I wouldn't be involved in this trade because once again, the risk to reward profile to the Asia low is only just under 0.5 R. So that's something I'm not interested in. But you can see through that market sentiment that price is falling, and there was actually another ASFX entry in there with all the stars aligned. So once you can see, price broke out of that Asia range on this candle here. L50 has held below that 50 value all trading day. So since the Asia session started, remember we were saying the first 8 hours of the day, this candle over here broke out. You wouldn't want to be involved before that breakout because it is a knock. You still can, but there's a chance it may reverse. So that's just, once again, shifting probabilities into our favor. Price comes back up, tests the 50 EMA. We get our signal. You can see price instantly comes down. We're in the money after we take our position. And this is more or less what we are looking at. So once again, I'll go over what I'm looking at here, and that is EMAs are in full trend. 800 on top, 200 below the 800, 50 below the 200, 21 below the 50, and the 8 below the 21. That is full trend. You're looking at the TDI market sentiment, telling us which way we should be trading. Below the 50 value in the sell zone. Short bias EMAs, short bias TDI. We've got a breakout of the Asia session, which means price is about to move. You can see the breakout, it's not chopping in between the zone. We're not ranging. So once we have that breakout, we have that pullback to the EMA. We get our entry signal, and then that's shifting all the probabilities into our favor. So I hope you guys got some value out of this video. It's good to kind of go through backtesting. I'm currently about 100 trades deep in GBP USD, and I'll quickly show you guys the results of what I'm looking at. Now, up the top, you can see partial profits. So that's for anyone wanting to take partial profits, or at the bottom, you can see someone who can just take the trade, put your stop loss in, and let the trade hit your profit target. And then you can see 1.5 risk, and you can see how they play out. But focus on these two pie charts over here. There's about a 65.8% win rate if you take partial profits, and about a 55% win rate if you take no partial profits. But look at the loss, 17% and 17.9%, and 16.3% on partial profits, and 28% on no partial profits. So you can see the equity curve here as well, up to 50%, 100%, and 150% return, risking 1.5% on these trades. This is all my statistical data, tracking everything, the entry price, and how I'd manage the trade. So this is just a good example of how analytical I can get with my backtesting, and how I'm shifting all these probabilities like you're just seeing on GBP USD this trade, how they play out, shifting those probabilities, and how it affects the outcome of the trade. I'm sorry this has been a long video, guys. I was hoping to keep it under like 15 minutes, but I hope you guys get some value out of this. How we go through the AceFX system, how I do my back testing, and how I graph it all together just to see how the trade performs over time, and kind of gives me more confidence to always execute on these trades, and also gives me the confidence to be selective, knowing that if I take a less probability trade setup because not all the stars are aligning, that I could get stopped out. So it helps me be selective, helps me focus on higher probability trade setups, helps me trade less, and it keeps me very relaxed, and it keeps the emotions out of trading. Hope you guys love this video. Once again, if you have not subscribed, please subscribe. If you liked the video and got some value out of it, hit the thumbs up, and also hit that bell icon to get notified when I release new content. Once again, guys, thank you. Have a great day wherever you are, and I'll see you in the next video.